please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Centre. I'm Manglam Malu and with me this Friday morning is Ekta Batra. Ekta, Friday morning, yes, but a lot of trouble in the globe, the Middle East region as well.
Yes, morning Manglam. Well, we have a lot to reckon with. Falls over 1%.
All eyes on the 23rd GST Council meet in Guwahati. Rate review for over 100 items in the 28% tax slab is on the agenda. Ahead of the crucial meeting, Congress stages a protest in Guwahati against the GST implementation.
Big earnings today. State Bank of India may post Q2 profit at 2,508 crores. Slippages and loan growth are key. M&M Q2 profit seen up 6%. Revenue growth may be led by tractor business. BPCL, Nestle and Motherson Sumi to report numbers as well.
Axis Bank will hold a board meeting today to consider raising funds through a sale of shares or equity-linked securities. Sources tell CNBC TV18 that Bain Capital and other PE investors may pick up around 5% stake in Axis Bank.
Aurobindo Pharma posts a good quarter. Revenue and profit much better than expectations, aided by strong growth in US, European markets and other growth markets.
And after an 829 crore IPO, Mahindra Logistics will list its equity shares on the bourses today. The issue price is fixed at 429 rupees per share. Right, first up, before we go into trade for our markets, let's take a look at the Asian markets. They are under a wee bit of pressure, rather fair bit of pressure as we speak. Weaker lead coming in from the Wall Street after the Senate Republicans unveiled their tax reform plan yesterday, which could indicate that the tax reform could be delayed. Remember, the bill called for the corporate tax rate to be cut from 35% to 20%. That change would likely come into effect only in 2019. So that softer lead coming in from the Wall Street, along with the fact that there is a bit of a trouble between Saudi Arabia and Lebanon, took the world markets lower and the Asian markets follow that lead. Nikkei down 0.8%. The Korean market should come up for you too. The Korean market was down about 0.25%. If you take a look at the other indices, the likes of Straits as well as the Taiwanese index, both of them down almost 0.4 to 0.7%. What does this mean for our markets? Well, the SGX Nifty indicates a weak start on Dalal Street to the tune of a 40-point decline. Remember, optically it looks like 10,334 because that compares with the Nifty futures, which is still trading at a premium of almost 53 points. So a 38 to 40 point cut is what the SGX Nifty is indicating.
Okay, well, shifting focus to Trump's China visit, US President Donald Trump didn't appear to convince Chinese President Xi Jinping to up the pressure on North Korea during his visit to Beijing on trade. He blasted previous US leaders for the explosion in America's trade deficit with China and does leave with more than $250 billion in business deals that, given their non-binding nature, may not ultimately amount to much. Trump now heads to Da Nang, Vietnam for the Asia-Pacific Economic Cooperation Summit, at which he's slated to deliver a speech on America's vision for the region. But the real headline event in Vietnam will be his highly anticipated informal meeting with Russian President Vladimir Putin on the sidelines of that summit.
We will definitely write a new chapter in the U.S.-Chinese relations. We will definitely make a new contribution to realize a beautiful future for the U.S.-Chinese relations.
Okay, well, and on Wall Street, US markets fell, pulling back from record highs on worries that a corporate tax cut could indeed be delayed. A proposed plan by the Senate Republicans would push slashing the corporate tax rate from 35% to 20% until 2019. The move contrasts with a bill working its way through the House. The proposed Senate measure would also alter the individual tax system. CNBC's Hampton Pearson gets us a wrap of all what went down on Wall Street overnight.
U.S. stocks finishing the day lower. The Dow off 101 points, the S&P lower by 9, the NASDAQ down by 39 points. The number of Americans filing for unemployment benefits rising last week to 239,000. That's slightly above expectations, but not terrible. The Labor Department suggests that the processing of disruptions from the recent hurricanes is improving. More trouble for ESPN. A source telling CNBC the company will lay off more than 100 employees. ESPN announced more layoffs earlier in the year as the channel has struggled with lower ratings. The news comes also as ESPN's parent company, Disney, reported a rough fourth quarter. The stock was down in extended trading after Disney missed analyst estimates for both the top and bottom lines. AT&T Chairman and CEO Randall Stephenson saying on Thursday that the company was never told it had to sell CNN to give approval for its $85 billion acquisition of Time Warner. Stephenson also saying he has no intention to sell CNN. Reports came out yesterday the Department of Justice was holding up the deal unless AT&T sold CNN and other properties. That's the action from the U.S. markets. You have a good trading day in India. Back to you in Mumbai.
All right, and on that note, let's also get you some global opinion coming in from Mark Mobius of Templeton Emerging Markets Group on what he makes of the growth in China going ahead.
The original definition of an emerging market was based on per capita income. In that basis, China is still an emerging country, even though you see tremendous strides in growth and technological advances. They've done, to look at the amount of patents that the Chinese have been registering, it's just incredible. So they're getting there, but it's going to take time. I believe going forward, some of the state-owned companies that are big in basic industries like Chalco, we've had Chalco for a long time, China Aluminum, and they've done very well. And the reform that's taking place in terms of corporate governance is very, very important.
All right, and in Europe, markets posted sharp declines yesterday at close as a string of corporate earnings, primarily from the mining space, they triggered negative moves across sectors and bourses. Remember, most of the cuts came by from the mining stocks, the likes of ArcelorMittal, BHP Billiton and the likes. And this even as the Brexit talks resume, with both sides hoping to break a deadlock in negotiations before the end of this year. So the FTSE outperformed with a cut of 0.6% as against a cut of more than 1% seen on its other indices. Remember, with time running out to secure a deal before the UK departs the bloc in March 2019, European officials have asked Britain to make a satisfactory offer on the Brexit divorce bill. Across the peripheral indices, we saw some red too, but the one index that stood out from the emerging market space yesterday was the Russian index, up nearly 1%, primarily on the back of the crude spike that we saw. And because mining stocks were under pressure, we saw the Brazilian index down 2%.
Okay, well, let's tell you about the currency space. The dollar trades weak, on track for weekly losses after dropping on disappointment with a tax bill put forth by the US Senate Republicans that would delay expected corporate tax cuts.
In the world of commodities, crude oil prices rose on Thursday, supported by supply cuts by major exporters, as well as the continuing concern over political developments in Saudi Arabia.
From the precious metal space, a weaker dollar pushed gold prices to a 3-week high, the second such climb in successive days, while palladium has risen to 16-year peaks as speculators have resumed buying. Back home yesterday on Dalal Street, equity benchmark indices snapped a 2-day fall to close mildly higher, but broader markets outperformed in trade. So overall, it turned out to be a session which was quite volatile on an intraday basis, and we managed to just about hold our head above the water. But all's not well globally this morning, so maybe we could see some amount of profit booking. Mangla?
Absolutely, that's what the SGX Nifty indicates. But in yesterday's session, it was a choppy session. The key point was we managed to hold above the 20-day moving average. The Nifty managed to hold above that 20-day moving average. The Nifty Bank, that one led from the front, and that was on options expiry day. So that was one index that led from the front. And the recovery from the low point of the day and the fact that we held on to the 20-day moving average meant that the mid-caps outperformed. And when that happens, a lot of the smart money believes that perhaps there is some support at the lower end. Consumption stocks, they led the way, and how Page Industries, good set of numbers, the stock up 8%, Tata Global Beverages up 7%. We saw gains come by in Jet Airways as well as Pidilite too. In the last 3 sessions, yes, there has been consolidation. The Nifty and the Sensex, both of them have lost about 1.5%. But if you take a look at what happened in the last 12 sessions before those 3 sessions, we've actually gained about 3%. So is this a consolidation? Is this some breathing space for the moving averages to catch up? Well, if you take a look at the moving averages from November 3, the 20-day moving average has moved higher from 10,200 to about 10,300, as is the 50-day moving average, which has moved higher from 10,050 to about 10,100. So the support is coming higher as the Nifty breathes. The moving averages do catch up. Whether it's consolidation ahead of a big move or a trend reversal is dependent on how we navigate the 3 big cues today. The first one, there is trouble in West Asia, there is global jitters, there's the crude spike, and as a result of that, we're seeing some weakness come by across the global markets, as you spoke about, Ekta, the SGX Nifty indicating a negative start. But the 3 big cues today, the second one, we have the GST meeting. Outcome of GST Council meet, is there rate rationalization? Building products and FMCG stocks did well. And the third most important cue, big earnings today. SBI, M&M, BPCL, Bosch from the Nifty. We have L&T results tomorrow too. So we'll keep an eye out on all those things. Some support coming in from the F&O space. The 10,000 put has moved higher to 10,200 put in terms of optionality. So support's moving higher. Watch out for the 20-day moving average, the 50-day moving average, and the closing high of 10,450 on the upside.
Stocks? A
lot of stocks, Ekta. We'll talk about results, but before we do that, Axis Bank, they have the fundraise meeting. Bain Capital and other PE investors are likely to buy 5% stake, is what the CNBC news sources suggest. Then moving on to the results, Aurobindo Pharma, you'll talk more about it, but revenue and profit much better than expectations. JSPL2, the EBITDA came in higher than the CNBC TV18 poll. SAIL, they had a good set of numbers. The revenues up 21%, margins actually expanded. The stock has moved quite a bit. Let's see what happens in today's trading session. Crompton Greaves Power 2 saw a 50% jump in the EBITDA. Trent, a superb set of numbers, 19% top line growth, EBITDA grew by 100%. Westside, like-to-like sales growth came in higher by 12%. Heritage Food, not so good. The net profit collapsed from 24 crores to 7 crores. DFM Foods, a very good set of numbers, 21% revenue growth, 58% EBITDA growth. Saurashtra Cement saw a margin expansion to the tune of 450 basis points. BLS International, again, an EBITDA growth of 250 basis points. Intrasef Technology, again, an EBITDA growth of 57%. All these companies are lowering their other expenses, improving their operational performance. GST-related plays will be in focus yet again in today's trading session. And then we have the new stock, Mahindra Logistics, that lists on the bourses today.
Okay, all right, Mangalam, thanks very much for that. So heavy day in terms of earning reactions as well as what we can expect. Obviously, state SBI would be top of mind today.
All eyes will be on the crucial GST meet underway in Guwahati today. Yesterday, a protest march was conducted by Assam Chief Minister Tarun Gogoi, who sought relief for medium and small enterprises. Finance ministers of the non-BJP states are now openly coming out and criticizing the government over the forceful implementation of the GST and the complicated mechanism of registration and GST and glitches. Rituparna Bhuya, who filed this report on the key expectations from the meeting today, here's this report.
The Guwahati GST Council's agenda can be divided broadly into 4 parts. Firstly, of course, is the rejigging of the 28% GST slab rate, wherein several Congress finance ministers as well as from corporate India, there has been demands that this tax slab of 28% should be completely reviewed. Items which have been proposed to be reviewed under this slab and be brought down to slabs of 18%, 12%, and even 5% include items used in the construction sector, items used in the sanitary ware segment, such as sinks, wash basins, seats and covers for toilets, etc. Plastic furniture, detergents, electrical fittings and electrical accessories, razors and razor blades, tiles and wools. So around about 100 to 170 items could see from being reviewed and perhaps the rate on these items could be brought down to lower rates from the current 28% slab. So that is one. Secondly, of course, is review of the composition scheme, wherein the threshold is being proposed to be brought up to 1.5 crore annual turnover, and the tax rate under this scheme to be brought down to 1%. Last but not the least, there is also a proposal to have quarterly returns, and it remains to be seen how many of these proposals get taken forward in the GST Council meeting in Guwahati.
All right, we'll keep an eye out on that, but let's shift focus now to earnings. A heavy day of earnings today, but yesterday post-markets too. Aurobindo Pharma Ekta posted a good set.
Yes, a very good set of numbers. In fact, I think the street was extremely surprised with the performance that Aurobindo came out with overnight. So, for example, the revenue was up around 17% and that was led by the US business, which was up around 20%. Now, remember that the US business is around 47% of their total sales. So, it's a very important part of their business. And the US formulation business was up 21%. Why is that? Is because obviously they had benefits from Renvela generic, which is basically that kidney drug that they had launched in the month of July, but that has now seen incremental competition. So, that was one of their big launches which aided, but other markets performed as well. So Europe was up 37% and we had growth markets which was up 37.7% as well, which is around 6% of their sales. So you can see that they were firing on all cylinders when it came to growth, and that was a positive for Aurobindo. That percolated down to the margins, which came in at around 25%, largely in line with what the street was expecting, and the profit was much better than expectations because of this operational outperformance, which came in at around over 700 odd crores. In fact, it came in at around 750 odd crores, if I'm not mistaken. So overall, yeah, 781 crores. So it was a very good performance which came in for Aurobindo on all fronts, and the conference call is at 8:30 a.m. So we're just going to wait by and see what they have to say when it comes to growth, when it comes to the US market guidance, because if they've shown such growth, how much of it was from Renvela generic and how much of it was organic growth in the US, which is basically just from their new launches, would be something that the street would be looking out for keenly.
All right, Ekta, we'll keep an eye out on that, especially the conference call and given the outperformance that the stock has had as well.